All right, welcome back, guys. So, today we'll talk about stop loss, and I want to ask if there is anything unclear about entries. Please ask if you have any question about it, about the last session, and make sure you watch the session. I know I have uploaded it today, but I want you guys to watch every session as much as you can because every time there will be something new you will catch. There's a lot of information in that, and when I edit those videos, I make sure I remove a lot of disturbances from that video. If you have any questions, I guess there are no questions. Current trade on AUD JPY is doing really well. It's about to reach 1 is to 5. Around here is 1 is to 5. And then the target is this. I'm not going to increase this because I'll give it some room. The thing is, on the 4-hour time frame, this current candle is perfectly aligned to the top, right? On the next one, it's here. Of course, you can scale this target over the period, but I want to give it some room so that if it's not completely going top and starts coming down from around here, it hits a target and we are out of the trade. Right now, it's doing really well. But most of the times, the only problem with people is they see this price action going something like this. And when the candles, even I am affected by this, when the candle comes down, maybe creating a structure like this, almost pulling back over here, that means most of your profit is gone. That is when a lot of us get frustrated. And maybe we are setting break even or maybe SL around here so that we capture at least 1 is to 2. But when you're in a trade like this, you have to move along this line and you have to give some room to it as well. That's why my break even right now is still here and I haven't moved my target because the 4-hour EMA is right here. I can see the wicks coming down to this much distance below the EMA. So I don't want to get out of this trade at all. Instead, if the price comes down to this level, let's say if it comes down to this level, I will then increase my target because now I know the price will again take a week or maybe something like that to come back up. So I'll rather be in that trade. And anyway, it's on my broker account. Prop firm, I know the positive swap is like a myth there. You are not given positive swaps, but with brokers, you get positive swaps. So I'm getting positive swaps every day I'm in this trade. Right now, it's around $12 on the $200 risk, but every day it's increasing. And longer I'm in this trade, the positive swap is only going to increase. And right now, AUD is positive, it's bullish in fundamentals as well. So I'm hoping it will definitely reach our target. A lot of people actually do that. Even I was used to this. And the main issue with this is that you have to capture maximum profit. Maximum profit. When you're not strategically moving your stop loss and maybe getting scared of it and closing your targets early, this destroys your risk to reward. And when this destroys your risk to reward, that means it is also destroying your confidence. Your confidence about you should be closing earlier over your next trade. When you see the next trade going up, you will close early rather than letting it hit your target, letting it do its own thing. You will eventually close your trades very early. And there's one more thing with trades. A lot of times we take bad trades, which has not met all our confluences. It has not broken resistance, the things we should wait for. And yet we take the trade and it starts going in the profit. Starts going in the profit, and maybe you hit 1 is to 3, 1 is to 4. But the problem with this trade is that once you do this mistake and you see a profit over there, you will keep making this mistakes. You'll keep making these mistakes, and this is going to be a problem because a lot of times you will then hit your stop loss because of these mistakes. One good mistake, I mean, a mistake that is benefiting you, is a very bad thing for you because then you get a habit of taking bad trades. So make sure you don't take bad trades. If you're taking bad trades, it's a mistake, it's fine. don't do it again. Break that moment right there. For example, on XAUSD, I told you guys this is a very high risk trade in my last session on Monday. I told you this is the liquidity area. The price comes down and then moves up. So I did whatever I wanted. Like I waited for my confluences and everything, but I didn't look for this at all. Even though I knew that the price might come down around here, which it eventually did, and then it started moving up. It's back up again. So that was my mistake, definitely. And what I'm gonna do for it, I'm not gonna try to make that mistake again. Mistakes are going to happen while you're trading, but what you do is you try your best to not repeat those mistakes. Right now, I'm not gonna trade XAUSD at all because now I don't have resistance level. Also, I see that in history, I have always made profits on gold when gold has been moving up, breaking highs. So this high was made around 29 Jan. It's almost a month now, almost a month, maybe a week less. But until this breaks, I'm not going to trade on gold because it's very easy to trade gold when it's breaking highs. And I have seen that people generally scalp on gold. Supply and demand, everything works very well. I have actually done supply and demand on gold a lot of times initially when I was scalping, but I don't scalp anymore. And so I'm not going to look back in gold for until it breaks the high. So I hope this is clear. Even if this trades pulls back to this area, don't be in a rush. Don't lock your profits at all. You only need to make sure that on a prop firm, if you're in multiple accounts, you don't go in the drawdown. Okay, there's a drawdown limit. I guess it's 5%. So when it is reaching 1 is to 5, you need to make sure your stop loss is here. When it's reaching 1 is to 6, you need to make sure you have a profit locked somewhere else. Your SL has moved somewhere else. If you're in multiple trades, it's going to affect because let's say you have two trades going up, each one is around 1 is to 3 right now on the upside. And when both of them pull back, so 5% is very easy. Price might go to that drawdown and your account will be breached. So make sure you always check what's your drawdown limit. It's on your dashboard. There's a daily drawdown limit. Make sure your balance doesn't go below that. Even a dollar, it moves down, it will automatically close your trade and then that account is gone. I hope this is clear. Now let's talk a little about entry before we move to stop loss. So the way I had learned, right? So in a way where you see weekly time frame, right? It's bullish, whatever, multi time frame analysis, exact same thing. And it's actually come down by a lot of people. There's Rainer Teo who is also doing something similar. There's many more traders who is doing exactly this. You have to first see what's the weekly time frame doing, whether it's bullish, it's bearish, and then on the daily time frame, what it is doing, it's whether it's bullish, bearish, and when all of these confluences are done, the analysis is done. Based on that, you draw your support lines. In this example, we have a trend line. So in this case, we are waiting for the price to touch down here, and all you have to look for is 4 hour bullish, right? A turn where on the daily time frame is coming down, and then as soon as 4 hour time frame becomes bullish, you wait for the next moment, which is something like this candle, an engulfing candle, and then you enter. It's as simple as that. But I have something added up in my confluences, which is something like this, where I see a resistance at this point, and if there is a break, if I see this resistance has been acting up a lot, then what I'll do is I'll rather enter after the break of this. The continuation should break that. In this trade, I haven't done that because I have seen history. I also use history for entering the trade. So there are a lot of things I do differently from the people I have learned. And the reason is plain simple that I became successful because I had to look at price action every day. I had failed a lot with all of this stuff. And so I started looking at history. And I saw this that the price does repeats itself a lot of times. For example, this exact trade is the profit we are in is just because of this movement. I took this trade and called out in public just because I saw this movement and I saw the price then continues up. I just waited for the exact same price action and it has been doing that. I didn't move my stop loss up here because I could see the price can easily come down to the trend line again and then start moving up. So that has so far benefited us in this trade. So you have to look at history and decide where you should enter. In this trade, in a trend, you trade differently. Where you are seeing enough price resisting at the support line, something like this, the price action where price is resisting the support line and then it's continuing inside. So these kind of price actions matter. The structure, all in all, is what matters because this structure, the 4 hour bullish structure, and then the continuation on the 1 hour time frame, it looks much better. You can clearly see there's there's a good support line, right? Price came back, it didn't break it, and then there's a very good candle moving up. Then there's second candle moving up. Then there's price rejecting the EMA on the 1 hour time frame, and then after this rejection candle, which is a pin bar, we entered, right? So you have to see a lot of different things. You have to see what the EMA is doing, what the price action is doing, where the buyers are sitting. So from this, we understand that the sellers are not breaking this level at all. Now the buyers step in and they reject this level, the EMA level, and more buyers come in to close the price right here. This is a good entry at the end. So I hope you get this. The entries can be very different. You have to mainly look for structures while entering this trade. When you're trying to sell, now in terms of direction where you trade, you have to see the probabilities in a pair, right? How many times the price comes down and moves up? How many times? So in this trend, every time the price comes down to this trend line, it moves up. It is moving up, it is moving up. It's not actually breaking down the way it has broken down right here. But this trend line is new. The original trend line was below this. So price action can definitely do that. It's under the trend line in the major trend. If you start from somewhere right here. So when you have this probabilities marked up that every time price is doing this, then you enter based on that opportunity. Now I'm saying this because this trend is a very simple way of explaining this. In a support and resistance, I had a picture from Sadia about GBP USD. She was looking for a sell. She had done some analysis right here on GBP USD. Now, if I look at daily time frame, so she had a level marked up right here around this area. But what I see on the daily time frame is it's just very few lines and it's not the swing high level. It's not the swing high level. I have a daily SR marked up here and I can see the probability of this. There's one, two, almost this went deeper, but at the end it raced to the downside. This one, then one, two, three, four, five, six, right? Six times price did this. And how many times it broke above one? It almost rejected this one here. So it's not a direct one, right? So this is one, smoothly went up, two, smoothly went up. So these two places is where price smoothly went up easily. So six against two, imagine that. Six against two. You can definitely not enter a buy trade until you see a candle close above, a retest to these levels, and then continuation. But when the price comes down to this area, you would rather look for a sell and you won't look for a sell around here. You would look for a sell around here because this is where the swing highs has been returning from. If you see the swing high, the price comes from here, goes up, and then comes down. If you see this, this is the swing low, swing high, comes down. Swing high, comes down. I hope you're getting this. This is where you look for entries. This is where you draw your support and resistance lines. So over the period, you will see a lot more support resistance lines, but those don't mean much because if you have different swing highs in the history, which you can clearly see that the price is coming up till here and then coming down, then why would you trade from a place like this? Sadia, I hope I'm making sense to you. Right. Now, when you're looking for SL, what should be your targets? What should be your target? So, from this price action, when you see this price action, what is the very common liquidity level if you're looking for a sell? Is it this one? Is it this one? Or is it this one? Let's call this one, and then two, and then three. So if you're looking for liquidity levels in your stop loss, what should be the level you should look for? Should it be one? Should it be two? Should it be three? Where exactly should be a stop loss? Everyone, please answer quick. All right. So that is why it is very easy to, the market to fool you. Everyone answering three, it's wrong. Two is also wrong. One is right. And I'll tell you why. This is the max liquidity level, right? But how many times price actually rejected from here? Just once. Second, this one, nothing, right? But this one right here, right here, it's the same levels, right? Here we don't have that history, but one, two, three, four times you can clearly see price has rejected from this level. So this is when you're looking for a sell. When you're looking for a sell, this is the first thing you need to see that whether the price has taken liquidity from upside. Let's say price comes around this level, okay? There's no wick touching this level and it starts coming down, okay? The problem with us would be we'll look for a short. Maybe it comes very close to this level, very close. Let's say it came this close. And we'll definitely look for sell because it came to our support and maybe we see a very huge 4-hour candle coming down to this level from this level. But we'll definitely not see whether it created a wick around this level, at least from this level. If you don't see that, if you don't see this wick coming down from this level, then what happens is you have entered way too early. Your stop loss is probably around here, around this level, and the wick will come and it will destroy you. I hope I'm making sense. Your stop loss will be affected. Now, when you're looking for a change in structure, let's say I want the 4 hour to become bearish, and then I want to trade. So that means on the 4 hour time frame, so the price will do something like this. It will come up, create a wick, and then comes down, and then goes down. Something like this, right? Now, first thing first, we don't want to see a wick on the 4 hour time frame. 4 hour candle can definitely close here. What I want to see is a wick on the daily time frame. A wick on daily time frame. That is what I want to see. So that means 4 hour can easily close here. So a lot of times this can be confusing where 4 hour time frame is just closing here and you might think, okay, 4 hour just broke resistance. No, it didn't. It didn't break resistance at this point because the daily hasn't closed. So when the daily is retracing, and it can happen in the same day, it can come down and there is some structure around here. Let's say this is the higher low and this is the higher high and this becomes bearish and then there's a move coming up, creating a lower high and then a lower low, right? Below. So you definitely can't wait for a wick coming down all in all, right? Sometimes you have to take that entry. I would rather see more price action, like maybe there's a close right here, so I'll wait for the candle close on the daily time frame. But sometimes you take entry in other cases. Now, on the 4-hour time frame, if I enter from here, GBP USD, if I enter from here and try to put my position right around this level, the stop loss is this much. But let's say if this one is right here, yeah, this one is right here, my stop loss is now huge, 50, 60 pips, whatever it can take for 4-hour to become bearish. It can take 70 pips. So the problem with this trade would be at this point that first of all, you didn't wait for a continuation where you see second structure of bearishness, a continuation of 4-hour continuing to the bearish trend. That would be a problem. Second, when this wick is already created, this wick is already created, this liquidity is already taken. Why would you try to cover that stop loss again? Because you know, if it comes up again, it's definitely hitting your stop loss because it's going to go deeper. I hope I'm making this very clear. If you are trying to cover this stop loss where the wick has already done its job, the job is done, it's not supposed to come back up again. That means your stop loss would be very wrong at this point because that wick is done. If the wick comes up again, it's probably pushing up more. It's going deeper in the trade. So your trade is completely wrong at this point. So your stop loss can maybe hit earlier, and this is a benefit to you. Let me tell you how. Imagine if the stop loss is tighter, you know that this wick is done, the job is done right here, and your stop loss is somewhere around here, around the structure, and you're waiting for confirmation of a break. Now your stop loss is tighter than the previous one. Your stop loss is tighter. You have added a confluence of 4-hour is continuing the trend, and you now have a higher risk to reward. You have a higher risk to reward. And if it hits your stop loss going back up again, then you have already used that structure and it's moving up till here, then you're completely wrong. I hope I'm making sense. There's no need to cover that. When do you cover that? When you're taking an entry, let's say on gold, when we were taking this entry, I just didn't cover this because of the huge stop loss reasons. But like I told you in the last session, imagine I would have done what I said that this is a high risk trade. Instead, if I would have put my stop loss around this level, I would still be in this trade. And the reason was very simple. There's a continuation, but I can see there's a wick coming down. This is a liquidity level. At this point, having this stop loss is very necessary. Now, this was a mistake by me, but having this stop loss is very necessary because this level, this zone is a liquidity area. And I had called out this price action way before it did it. All right. I hope I'm making sense how to put your stop loss. So far, are you guys with me? All right. So, Sadia, your question was if price reject from the daily SR as history, we can look for sell. Where is that GBP USD? Yeah. So, yes, if price starts rejecting from this level, what you have to first do is you have to look back in history like we do in the analysis session, exact same way. You look at what kind of price actions you see around this area. You see the wick comes up, then it comes down, and it has actually touched this level again and then continued. But this wick was created, it never came back to this level, right? Now, 4-hour as well has never closed above this level. It touched here and it hasn't closed above, right? And it started moving down, and then the price action like this is very good. Never came back to affect that level. So I would say you can easily look for an entry where price is reaching around this area. And the reason is this, that I can see the price came down to this level. It somewhat rejected, but never touched this level. And when price, it started moving down, but again, it came back up and it came around this level and never got back to the same level. Right here as well, you can see the candle close is almost at the same levels. So if you see the price coming down to this area, you can definitely look for entry, and you will definitely see price actually coming up around this level and then going down again, because there's a liquidity level right here. You can see there's a liquidity level right here, and then this areas as well. It's exact same places. You can see this wicks, the small wicks, it's the exact same place, these ones. So you can definitely look for an entry after this liquidity level is taken, a continuation on this. Don't take an entry here, rather wait for this liquidity level getting hit. And once that is done on 1 hour time frame, after the liquidity is taken, you can take an entry. So two types of entry on this trade. So past liquidity level has to be considered while plotting SL. Not just the liquidity levels, you have to look at history. You have to see how many times what price did, what exactly it has been doing. You have to see that clearly, that what kind of price action it is doing, what kind of liquidity levels exist on smaller time frames. We already saw the daily time frame. What about the 4 hour time frame? What it has done, what kind of price action we are seeing. Based on price action, you put up your confluences on what you want in your trade, and then above that structure, once it is done, you try to keep the resistance or support in your SL and then take entry. If it has moved down something like this around this area, then you put SL just above the structure. At this point, it wouldn't have benefited us. But on the first touch, when the price comes a here and touching this level, I clearly see the price comes down at least to this level. And from this level, it starts rejecting. Here it continued, but at this level, it is rejecting, right? So your take profit target is this area. And you can see this level is also a liquidity level right here, one, two, three, and this one, four, five. So many touches around this level. I hope I'm making sense. So when the price first comes, not the second time, when the price first comes to this level and it is rejecting, only then you take entry. If the price is doing something like this, where it came up, went down, and then now again it's coming up, now you don't look for a sell from right here, because price is trying to continue going up. Now the next question is, if you didn't take entry in XAUSD before, did you take the trade on the retracement? So on XAUSD, I did take entry, the one I showed you, this one. But after this retracement, I never take entry again. I know I saw this and the price action has done this, but it's a psychological thing where you don't look for an entry back to back on the same trade. If you have already lost it, just accept that loss. Don't try to take that entry again, because there are too many things at this point where price should have actually continued going up. This big, huge red candle is saying something that a lot of sellers have stepped in and they are trying to lock profits at this level. See this price action, these red candles, the size are so big that the green candles have not made a similar candle like this so far yet. And after this liquidity was taken, Right here, it was a different story. Right here, it's a different story. The price action is slowly moving up and it can come down again because the fundamentals as well is not properly aligning. There's a lot of mixed up news. Gold is a pair which more of moves fundamentally. If there is some problem in some country, gold goes up. If there's war happening, gold goes up. But if the countries are very stable, you will see gold as well starts consolidating. And when it is doing consolidation, I don't enter this trades because it's not going to give me any new highs. Nothing new so far on this trade. I won't get that. I've done this mistake a lot of times of entering on consolidation, but your first SL definitely tells you that now you should stop entering gold. For me, it does. Now back to SLs. This is the way you put your SL. You have to look at liquidity levels. You have to look at the price action history, how many times it can easily come back up or come back down. Based on that, you put your SL. In a normal structure where you don't have those liquidity levels, what you do is you put your SL around higher low or lower high. In this trade, this is a bullish trade, so around this lower high, and you keep some distance because liquidity, if we are seeing this low, liquidity will be sitting just below this level where if price comes down, a lot of buyers are sitting here. A lot of buyers are sitting here. Institutions are trying to hunt you. No one is hunting you. There's nothing happening there. It's just that a lot of people are in this position. This is a very big market, forex market itself. And what happens is a lot of orders they want to buy at discount. And so the price is probably sitting around these levels, around this level. So what happens is price comes down and takes that level. A lot of buyers join in again and then moves up. I hope I'm making sense. A lot of buyers join in below your higher low structure. So what you do is you keep a 10% margin. If you see there's a low right here, you don't exactly put your stop loss around this level. Instead, what I do is I see this is around 7,000 pips. So I try to make it like 8,000, 10 to 15%. 8,000 sounds good and it's a very good distance. That means if price comes to this level, this trade wasn't good at all. I'm completely wrong here. My stop loss shouldn't have been here at all. So I deserve that loss. So always keep some distance with your trades whenever you're entering. On the AUD JPY pair as well, you can see there's some distance from right here. I could have easily covered these lows as well, but I didn't want to because it was not fitting in my trend line. My trend line was up. There were two trend lines when we took entry, and my first trend line was up, and I had enough confidence on this trade that if it is coming back to this level, then I'm completely wrong. I deserve that loss again. Now, let's talk about trailing stop losses. How do you trail your stop loss? This discussion is exactly what we have been doing in the past sessions. It's just little by little I have been infusing that idea. But let's talk about this very clearly again. Now, when I look at 1 hour time frame, so first let's talk with the EMA. When I look at 1 hour time frame, I see that right here the price has been using this very nicely and it's moving up. But in the very recent history, it broke this EMA a lot of times. Right here, it moved up to go down, but to go up, it broke this level a lot of times. And this exactly happened again. So that's why you can't use 1 hour EMA to put your stop loss. Now, what about 4 hour EMA? I can see on the 4 hour EMA, price after touching this level until it goes up, it's not closing a candle below this. right? It's moving up. There's a small close right here below the EMA, but again it moves up. But there are large wicks around this area. When it's touching this 4 hour, again, huge wick. Compared to the candles, this one is a huge wick. Again, we see huge wicks. So proper candle closes can be seen on the EMA itself. So what do? You put your stop loss with the distance, understanding that if the market is creating huge candles like this, the wicks are also going to be huge. That's a relationship with the EMA and the wicks. Huge candles right here, that means it can create a huge wick. When it's creating small candles like these ones, definitely this one is a little big one, but comparatively in relation from here to here, you can see all these candles are not as big as these ones. So this wick was not as huge as this one. So I hope you're getting the point. Now, these candles are not as big as these ones, but they are not as small as these ones as well. So what you do is you understand the resistance. Based on that, you just measure it. You can measure the longest wick so far created. This one is around 52 pips. So you can put your stop loss because of the small candles. You can put your stop loss at around 40 pips. This is just a calculated difference, nothing very accurate right here. It can still hit your stop loss. But through the understandings of the market, I can assume that I can put my stop loss below the 4-hour EMA with 40 pips distance. Also, I have more history that price comes down around this levels multiple times before it hits up the top line. So what I do is I can put my stop loss around this levels and move my stop loss according to this. Now this definitely doesn't actually lock my profit way too much, but this is anyway a secured trade where your price is coming down and eventually it will come up. There's definitely a chance where price will come down and break this trend and hit your stop loss, but that's a chance you take with your trades. Imagine if the price comes down and if you're looking for the target again, this target will increase. This target will become something like this. It will now give you 1 is to 8 or something like that because now you're expecting the price to come up till here around this level. So it will give you 1 is to 8, 1 is to 9, something like that. So if you want to lock higher profits, you need to wait for the structures to create. You need to give price action enough room so that it doesn't hit your SL. If it's hitting your SL with some profit, let's say at 1 is to 3, 1 is to 4, it should be very strategic. In short, this should be the idea that SL getting hit means the chance of trade actually just flipping is very high. Else, you shouldn't get out of this trade. The chance should be very high that the price has done its job and now the trend is going to get over. The fundamentals are not with us. You have clear reasons to put your SL at that point. Unless don't put your SL at those points. Now, this was with EMA, right? Now, how do you do this with support and resistance? Now, this is a trend. If you are able to find some relations with trend, definitely you trail your SL with EMA. But if you're not able to find these relations with the EMA, you can move down to structures where price action is doing structures. Now, let's say we are looking in Euro USD. Let's say we are looking at Euro USD and I see at this point that when price takes this liquidity level, I should move my SL above this. Once this liquidity is done, a candle closes above, my SL should be around here because the next time price comes up again, it will probably come down something like this, right? So let's say I'm in a trade which looks something like this, right? I see a retest and the price coming up here, and let's say I entered. I entered around here. Now, you have a clear reason that The price, first of all, it's drawdown. The next candle also is in drawdown. It starts moving up. It starts moving up. And now the price is eventually just going up. It's not coming back. Now, at this point, I know this price action is done. This price action is done. I can easily put my SL to around this level. Maybe with the EMA, 1 hour, 2 hour EMA, whatever the history has been, but I can just put my SL around this level. And once this price action is starting up, I'll have to look in history what kind of levels are there. Okay, there are no liquidity levels. So again, I'll have to do this on the EMA. So let's consider another position. Let's not waste time on this. Let's imagine we took an entry somewhat around here. Okay, just for imagination. And we are targeting a profit like this, right? Now, when the price started moving up, we can't move our SL because you can clearly see the liquidity is not taken. The liquidity so far in this price action has not taken if the candle is here. So you can't move your SL. But as soon as you see the liquidity was taken from this level and the price closed up, you have to move your SL back to break even. And why do you have to do that? Because the liquidity is taken. Now, if the price comes back down, it's definitely there's a high chance that price will continue moving down. Now you don't want to be in this trade. Once this liquidity is taken, you can now start moving your SL accordingly. For example, Yasir, I see you're in a trade in gold somewhere from here, and the liquidity is already taken. Now you can easily put your SL to this place, And the reason is there's a second liquidity level right here. So just keep a little distance, maybe put your SL around here. And once price starts moving up and breaks this high, you put your SL below this because there's a structure, there's a support and resistance right here. There's new structures. The price has been rejecting from this, and you can see this is a resistance, this is a resistance, this is a support, and this is the recent low. So you can put your SL below this structure. There's one way of doing it. Second way of doing it is this EMA. You can see price ejected from right here. There's continuation. And on the recent side, price hardly touched this EMA, right? So you can move your SL with this 2 hour EMA. Put your SL around this. Once this price action is done, if the price is just moving up, start using 2 hour EMA to move your SL. Keep some distance, a distance like this, a distance like this, whatever 5 pips, 10 pips, 100 pips this is. You have to measure that and put your SL below that with a little distance. I hope I'm making sense. So EMA is a very good way to trail your stop loss because it clears your mind. You don't have to think a lot about this. Next is support and resistance. Support and resistance is where you see price action has already done this. Price action has already done this. It has retested these levels and now it's continuing up. So that means it has taken support. It has taken support, and these levels can act as liquidity levels. You can see the price retraced from right here, and then this confirms that this level has some value. These two wicks confirms. So you just put your SL below this and let the price do its own thing. Because when price comes down to this level, then you're definitely wrong. The price can easily start continue going down. And once you're out of this trade, once your SL gets hit, for example, for me, when the price did this, it hit my SL. I was looking at this price action whole day. Again, the price was easily doing all of this stuff. It came down. Even I get that feeling that let's enter this market again because it has taken the liquidity level. All of it is looking really good. But the problem with this is this is going to be a revenge trade where I'm just trying to take revenge from the market, trying to get that money back. And I've told you guys that when you hit your SL, come back next week rather than just trying to make that profit right now or making that lost money right now. Come back next week. with the proper analysis. Do it on Saturday, do all your analysis, and be prepared to take that money back, but with a clear mind. Now, support resistance is one way of, you can see this level right here as well. You can see it is confirming this touches. This rejection as well is confirming this touches. But this was a fundamental thing where a lot of sellers stepped in. This is not exactly fundamental. Of course, the price moves because of fundamentals, but price has been doing nice movements rather than making huge candles, anomalies. It's not anomaly. It's a clear price action where it's taking support and it's moving up. So you can easily consider these levels and move your stop with it. Now, let's see if we have some more trades to explain SL. Right here, we put a break even at this point, and the reason was very clear. You can see there's a liquidity level. There's a liquidity level right here, and the price had already done this. That means if price again comes back to here, that means I can be very wrong. And luckily, we did exit the market at this point because the price eventually, it went up till here, it came back down. Now, a lot of traders would say, okay, we shouldn't have exited at this point. But at the end, the price just moved up. And this happens a lot of times. Sometimes it will actually continue going down, and that's completely fine. You just see what is relative in the market. If you see this liquidity level getting taken, this liquidity right here is taken, that means the price has done its job. The price has done its job. Now it's time to move your SL around this point. I hope I'm making sense. I always look at these liquidity areas. I take my decision based on that, and the market repeats itself more times than you can imagine. This is right in front of you. The trades we have been taking in these past few weeks, not past few weeks, since months, you have been looking at me taking trades, making profits. It's all because price has been repeating itself, and I have been just making benefit out of it. I'm trying to make benefit of price repeating itself. That's it, nothing else. My entries, my confluences, there's no hard coded strict rule of these particular things needs to align, this particular things needs to align. There's no fixed strategy here, if you see. It's just I am looking at what price action does around this level, and those are my confluences. Most of the times, what price action has done it. If I can't find that relation, then I can't trade it. If I find that relation, then that trade is going to be a good thing for me. And there's so many pairs. I'm sure you can easily get four pairs to analyze and add those confluences, get that history, get the relation, and you'll be done with it. Now, in the last analysis, I told you price will take liquidity from this level. This is the liquidity level, and the price should come down to come here. So, first thing is the liquidity is becoming very true on the daily time frame. The price is just moving down, right? From this level exactly. The liquidity is taken. I think we saw this on 4 hour time frame. Yeah. Price is doing the exact same thing. Even though the market opened differently, it went down first. And even this was actually discussed. If you look at the session, we compared a relation between two different price actions. Right here, I told you the price comes down, takes liquidity, and moves up. Price came down, not exactly to this level, but it took liquidity and it moved up. It is moving up, and right now it's coming down the way we wanted. Some pairs will definitely not align the way we want, but those who align is what we want to enter from. This exact price action was called out with you guys on Saturday. You can see I was somewhat in mind on Saturday that the price might not just touch this level. The reason is on the daily time frame, it has touched this level in history, but the previous structure as well had touched this level. So you can see it's kind of doing the same thing. It's doing the exact same thing, but it's doing from a different level. You can see this level was different, this level is different, and this has just moved a little down. You can see the structure is here. The structure, let me move this and let's delete this line. You can see similar structures, very similar structures where price is coming up. Same thing again it's doing. And it's almost touching the same daily EMA right here. It's moving down from the daily EMA. So it's repeating itself, just the level is a little different. So here I can definitely look for entry. I hope I'm making sense. It's doing the exact same thing. It didn't touch this level, but it's doing the exact same thing. And 4 hour came up to this level. Right now it's bullish. No, it's bearish. What is it? Tell me, what is it? Is it bullish or is it bearish? The 4 hour time frame. Everyone. Everyone, please. Is this price action bullish or bearish? All right, it's bearish. Now, if I want to enter this trade, how would I enter? There are a few confluences I've added, which is change of structure on 4 hour time frame. Stop loss should contain 4 hour EMA. But if I look at history, price comes down, it is retesting this level, the EMA level as well, and then moving down, right? To continue up, it came up, retest, move up. Right here, it did similar thing. Right here, it broke the level, retest, continued down. So it should definitely contain the EMA. But why would I waste my time entering right after this EMA is broken? I would rather enter when the price action does this, retesting the EMA and then continuation. When I see that continuation, after that, I'll take entry. That way, my stop loss will be tighter and better, and it won't waste my time so much. I hope I'm making sense. I can look at history. It's very easy. The next step is just price comes down, retesting the EMA, and then continuation. That's it. That's how I can make benefit of this trade. Now, Euro JPY, I wanted to enter this trade, but again, I didn't enter for one simple reason. I can see this price action didn't happen, but this was an optional case. I had said in the analysis session itself, go and watch if you want. But this is what I wanted exactly. Price comes down around this level and then starts moving up. I wanted to enter this trade, but I'm already in a JPY pair. I can't enter the same pair again. Euro USD price is doing something similar to this. I wanted the price to go up, retest this level, and I'm still looking for the same exact thing. Waiting for the price to come up, retest this level, and then move up. I want a structure. Not exactly maybe at this level, but I want liquidity to be taken from this level. So I hope I'm clear on stop loss. The session has gone long. So if you have any questions, ask now. We are almost done with the bootcamp. I'll see if there's anything left. Or if you have any questions, if you have any ideas you want me to clear out for you, drop me in the session. But we are done with the bootcamp. Stop loss is the last thing. We'll definitely keep having some sessions, keep discussing stuff. You now know everything this bootcamp was about. You now know everything. Okay, we'll talk about take profit targets in the next session. That's going to be a very small session because take profits are very easy. It's just you having one target and stop loss, trading stop loss, I've already taught you. Take profit is just a small part. I hope all of it made sense. Make sure you watch this session as soon as it's uploaded. Watch the other sessions. All of it is uploaded. They are up on YouTube. So make sure you watch those sessions. It's very important. A lot of things you will capture over the period. Like if you watch this video again today, you'll find something. After a week, you watch it again, you'll find something else. There's a lot of things hidden in words. You have to just make sure you pay attention to what I'm saying, because a lot of things go bouncer when I'm talking, but repeatedly watching the same content is going to reveal more information. Just like you watch a series, anything you watch repeatedly, you get to understand more plots, more things inside that series. It's the same way. All right. So we are done. I'll see you guys in the next session where we talk about take profits. It's going to be a very small session, and then we'll be doing back to back analysis every week. And we'll be doing in a way that every week I want you guys to develop questions. When you have those questions, I'll have a list, and based on that, whatever problems you're facing, just put it in that Excel sheet or whatever I'll share. Put that questions, and then we'll have a session about it. I will try to clear all that doubts, all in those sessions, rather than having it in a chat on Telegram. I'll rather put it in a video where it helps more people like you. All right. Thank you for joining. I'll see you guys on Friday. Bye bye.